I quickly wanted to do a quick check with you on the gamma environment for the afternoon and project what can happen between now, almost 1 p.m., 12:57, and 3:30, which is the close. So I have a chart on screen, and that is the gamma density chart. On my left-hand side, the orange and the yellow, and the gamma exposure is to the right of that. Now, here's the read in one line, one quick read as of 1 p.m. The market is positioned for a close at 25,900 spot. That's the settlement afternoon, 30/12/2025. The last series settlement for the year 2025, and the current reading at 12:58 p.m. is the market is positioned for a close at 25,900 spot, plus minus 10 or 15 points here and there, and we start from there and we break this session down into the why and what of it. So that one line takeaway is what you need to headline, and we'll break that into how it was arrived at, etc., etc. And I'll try to give you an understanding about how the metrics work out. But the short idea over here is that big money, and by that I mean the big institutional desks who trade the maximum volume on a settlement afternoon, are now prepared to trade the market at 25,900 spot, which is what the current charts are projecting right now. Right. So this is where it is, the density environment. Now, I'll just explain quickly what my charts are and what they are doing and how we arrived at that number. So we have on the left is a density screen, and you can look up these words, gamma density. We also have a convexity zone marked in, which is the option delta and gamma moving to changes in price. And on my right hand side, I have neutral exposure. We have buy side exposure because not every single trader in the market is a writer. To balance those writers, we have buyers also. So we calculate the buy exposure of the options market, and we also compute the sell exposure of the market. And when sell exposure is greater than buy exposure, and that's not always the case, sometimes they are balanced. But when sell exposure is greater than buy exposure, which is in the current case, you can safely say the market is in control of writers, and writers are the ones who are driving price activity. Actually speaking, price does not drive when writers are in the market and controlling the tape. They tend to hold price action, and that is what we have been witness to on screen as of right now. Right now, on the left of this gamma density chart is a -1 sigma level, and on the right hand side is a +1 sigma level. These represent areas where the writers are confident the market would go to. Now, there is an important nuance over here to understand. Just because I am saying the market is going to be at 25,900 and pinned over there, does not mean that between 1 p.m. right now and 3:30 p.m. the market is going to be moving in a range of 1 or 2 points. So there are going to be movements of about 40 or 50 points up and down. Price could be at 25,920, price could be at 25,940, price can go to 25,860, etc. But what these levels tell you is that these writers who are holding positions are confident of the market staying between 25,800 and 26,000, 26,000 and 25,800 between now and close. And what can happen, and this is a word I try to use with a lot of conviction, what can happen is that if price comes close to these levels, you may be witness to increased volume flow. And that comes about because big money will try to protect this position. So if price comes to 25,800 somewhere in the next 1.5 to 2 hours, big money is going to try to arrest the movement of price over there by hedging that current exposure. So what they may do is buy more long put out of the money positions. So somewhere like a 25,800, they'll go 3x, 4x, 10x also. They may buy futures to counter the effect of the move down, or they may try to support that existing position of theirs, which is in profit, the short call position. They may support it and augment it by adding a lot more exposure. The whole idea over here is that the entire settlement day inventory is to be measured, it's to be calculated, and it needs to be protected. So one good thing we say about settlement day is all about old business. It's about people who are already in the market and with positions in the market, and the way they protect those positions in the market. Settlement day is not about new exposure or people taking new positions for a tomorrow. It's all about those positions which were calculated and which were made 4 days from now, 5 days from 5 days before now, even yesterday, even day before, and how this afternoon is going to be spent in addressing those positions and making sure that those positions are driven to profit. So that's why anytime, it comes to this -1 sigma level or +1 sigma level, you'll see enhanced volumes. And as a derivatives trader, you've got to pay attention to this, because today the edges, which is marked by 25,800 and 26,000, is as important as this zone where the market is right now, which is 25,890. So pay special attention to the market at the edges, and you would be witness to a lot more volume. And in fact, the activity at the edges is a lot more volume wise than the activity at where price is right now, right? So this is the exposure and the convexity. Look up this terms, convexity and density, if you're new to it, but this is the edge which all institutions hold. And as retail traders, we should be looking at markets in the same way an institution does. The short read over here is, as long as the orange and the yellow are aligned, this is gonna be expiring at 25,900. You've got to be looking at this as orange and yellow moving away from each other. If this orange comes here, that is positions being adjusted, that is existing inventory being changed. And just to keep an eye out on what is happening in the market, existing inventory keeps changing at the rate of about 7,000 crores per hour. That's the net of Nifty as well as Bank Nifty. And at the rate of 8,000 crores per hour, and a gamma report of about an hour back is like reading yesterday's newspaper today. So try to stay current, try to stay with the most updated information on screen, and that is going to be the one which is going to help you to make better decisions in the market. Now this over here is now telling you that the gamma is adjusting at 25,900. We got a single peak of neutral gamma, which is 25,900 rushing in to sell over here at 25,900 CEP. If these start diverging early in the morning, this was like 26,000 PE was long. So I come back to about market at 9:45, 9:15 a.m. And you'll see over here early in the morning, the market was 26,000 PE long and short 25,900 PE. So that ratio was 26,000 PE was bigger. So that's why the market dropped a bit in the morning. And now you can see that the 26,000 PE is booked and they've shorted 25,900 CE, the call. That's why the market has gone to a single peak at 25,900 against the dual peak at 25,900, 26,000 PE early in the day. Now, to make sense of what is happening, the best chart I recommend is the NTM VolX chart. And this is a clear indication of what demand and supply is doing in the market at all times. Simply put, there is a blue line which measures demand, and there is a purple line which measures supply. And when purple is rising and blue is retreating, that is a market we do not argue with. We align with what the market is doing. So the charts are meant to give us a message, and it's a fool's work to argue against the message of the market with their own set of opinions and their own sets of biases. We do not argue with the market. We listen to what the market is doing, and we try to interpret the message of the market at every single time. So here's the message right now: purple over blue. That means supply is stronger than demand by a bit. Call writers are better placed than put writers in the market, and short futures are more profitable than long futures in this market. So that's the message: supply greater than demand. And if you're aligned to that message of the market, you are in a profitable position. So we focus on the NTM all options volume, because the majority of volume in the market is at the money. And how do we know that? You open up any options table and you'll be looking at the volume component. Now, I know a lot of you, when you open up options table, you look at the open interest, but you have to look at where the market is trading in terms of volume. And this orange font will tell you where the market has built in maximum volume. And you'll quickly see that this volume has been built between 26,000 and 25,850, which tells us that the volume is at the money, near the money. So that's why we use that term NTM, which is near the money for all options positions. So we focus on where the volume of the market is, and the volume of the market is currently NTM, near the money, or where price is trading at this point in time. So this NTM VolX is telling us where the market is positioned in terms of inventory right now. I'll give you another read via the market profile chart for the Nifty, and you will see quickly that the Nifty tried to put in an extension in the C period higher. And if you've been through the ecos and you understand a bit of market profile, you will know that the C period is a move which needs to be faded. It's what we call the dhoka period, and any move which comes in the C period more often than not puts in of what we call a failed auction, FA. And this is not yet an FA, but the minute it makes a new day low, this will be a confirmed FA of the market. You have been witness to me speaking about FA last week also. I believe that FAs are turning points of the market, and they are not to be neglected. They are actionable tails by themselves. And if you got to be a big driver in derivatives in 2026, that is one tool you have to add to your arsenal as you progress into derivatives. So this is not a FA yet, but if it starts making a new day low, this would be the FA failed auction we would be targeting. This also implies that the high of the market has been made, and there are very little chances of this market going back towards these highs at C period. In fact, we are now set for this market to drop to a low of 25,840, which is based on the order flow message and the IS30 we got early at the open. In fact, not at the open, at about 10:45. We have seen an IS30 intake. Initiative sellers show up on that rise, and that was at 25,956. So all these are tying in with what the NTM VolX is telling us, that the supply is in greater control than demand, and the path of the market is lower, is projected to hit a level of 25,840, and that's where we would be taking action if the day comes back to that. Right. So quickly go back to the density. We'll stay with the Nifty. This is still showing that 985 and at 1:11 p.m. and the gamma levels are still at 25,800, 25,900. You would be watching this as you go by. You can watch the order flow of the 25,900 PE, which is the newer of those positions. Remember, the market was 26,000 PE long, so 25,900 PE short is a new position, and every new position or a position which opens up later after the 9:15 a.m. Opening bell is a position which has got a lot more risk built in it. The older positions are the ones which tend to win most of the time, and newer positions are the ones which can come underwater more often than not. So you can open up an order flow chart and watch this, and the net inventory built up over here is about 418814. This is the contracts which are being built. They've stopped building it. It was about 50 lakhs, 9,558 in terms of contracts at about 10:45 a.m. But since that supply came in, it's reduced, but a lot of it is still here. And if they cross up above 44, where the early supply has come in, early put writers have come in, this could be something which could get actionable later in the afternoon for a Dukan trade if it does come about. But at the moment, we'll respect the message of Gamma. And why do we need to respect Gamma? Because Gamma is what controls price action. Remember, the delta of the option, if it's currently at 0.50 or 0.45, will change, and I stress those words, will change when price moves. So 0.45, 0.50 delta can become 0.75 delta very quickly if price drops by about 50 points. And 0.75 delta can go to 0.95. So because delta changes, the gamma associated with that delta, which is the accelerator, that changes. And because gamma changes, positions which are already existing in the markets have to quickly adjust their exposure, which is the entire sum game being played in the options market. And that is why we say that in the options market, on a derivative settlement day, it's the tail which wags the dog. And the very fact that the delta changes and it's not constant, gamma changes, and that is also not changes, that is also not something which is stable, can change the effect on price action. So on a settlement day at VTrender, we do not focus on what price is doing. That's the secondary part of the entire market. We in fact focus on the activity at the major gamma levels and the ranges which are there, and the existing positions which are built to see what kind of messaging is happening out over there, right? So to come back and sum it, currently it's 25,900, and I'll be confident of a 25,900 settlement for 3:30 today, as long as this yellow and this orange keeps aligning. If they start diverging, they start moving away from each other, and we break these levels, that's a market which is now completely changed. The hedges have to unwind, positions have to close, and you will see fast, rapid moves in the market. Okay, everything is stable as long as 25,800 and 26,000 stays between now and 3:30 p.m. But we still have a small drift lower. So the bias is more in favor of call writers, and put writers are the ones which could face heat for later in the afternoon today, right? So I hope, okay, this has been useful. I just wanted to quickly sum up the market for you. And this is the existing picture, which you should be aware about. And I would urge all of you to have a strong look at Gamma as you trade derivatives through 2026. This is a tool which all professional traders of the market use. And you, as somebody who trades derivatives, you as somebody who values your capital, should look at this tool also, because it's a measure of how the market tends to move. I'll sign off over here. I hope this was helpful. If you have any questions, please do shoot them on the text chat later. I'll see you after the settlement is done.